Welcome to the latest episode of the Forecast in 5. I'm your host, Seth Katz. Joining us today is Julie Blank. Julie serves as a partner with Advisors Real Estate Asset Services. In her current role, Julie co-leads the firm's capital investment division with a concentration on capital projects, property management, asset management, and investment management. Previously, over the last 25 years, Julie served in leadership roles with a number of real estate investment firms and property management firms, including New Standard Equities, Carmel Partners, Greystar, Irvine Company, and Alliance Residential after starting her career as a CPA in public accounting with Arthur Andersen. Welcome, Julie. Appreciate you being with us today.
Thank you, Seth. It's my pleasure.
Excellent. Well, let's get started with some questions. With headquarters in Northern California and a presence across the Western states, ARIAS strategically repositions commercial, residential, retail, and mixed-use properties to achieve the highest and best financial and physical performance for its clients' investments. Can you tell our viewers a bit more about ARIAS?
Absolutely. ARIAS was founded in 2018 by Rob Cord. And as you mentioned, it's a commercial real estate development, asset property management, and brokerage practice for office, residential, development, retail, and mixed-use investments across the Western United States. In 2024, to capture opportunities in a distressed cyclical market, Rob and I leveraged our experience and the ARIAS platform to start ARIAS Capital. Rob and I have worked together for many years on a broad range of projects and decided to finally unite to become a sponsor and operator known as ARIAS Capital. And we round out our team with Stu Kay, who leads our capital markets initiatives. Our team has over 4 decades of experience that brings real estate cyclical experience to our investors, and investment strategy resulted in the value creation. The investment thesis for ARIAS Capital serves one purpose, but in two ways. The purpose is multifamily demand, and the two ways are adaptive reuse and value add strategy. With the convergence of office distress with multifamily demand, the teams come in to execute conversion and repositioning with our multifamily experience. And for the value add focus, we have a competitive edge for repositioning underperforming assets by employing our physical, financial, and operational strategies to unlock the hidden asset value.
Fantastic. What do you believe makes ARIAS distinctive from other firms across the commercial real estate industry who are providing real estate advisory and asset management services?
The partners of ARIAS Capital bring an overlapping depth of real estate experience and a vertically integrated environment. The vertical integration is a holistic approach that the partners use to stay close to the investments, which impact each component of the actual business plan for the successful execution of the business plan. And we can talk a little bit more about that later, but the partners are also institutionally trained, as we worked for some of the largest firms in the industry before we started our own firm. And that's provided us with the insight into some of the best practices for success, as well as lessons learned, not to repeat with our own investments. And we work with clients from high net worth individuals to large institutions within multiple markets, various asset types and investment classes. We also use multiple resources when we're performing our necessary research, our fundamental research, economic data, key market indicators to really vet the viability of the investments. And we'll say also within the partners that we have parallel industry experience. We complement one another very well with our skills, and that we're greater, you say, in the sum of its parts. We're greater than the sum of the parts. So that really provides a strength to the platform that ARIAS Capital brings to our investors.
Great. You've worked for a number of well-respected national companies during your career, and you started out as an audit accountant. What do you believe are some of the advantages with having an accounting background, and how did this expertise help you throughout your career?
Yeah. Well, I can tell you, when I started out as an accountant, I never thought I'd be in real estate. So some of it happened organically, but the reason I've been successful is my accounting degree, my CPA, audit experience, and the company brand recognition. I worked for a very large public accounting firm at the time as a CPA. It really all assisted in the progression of my career, as it opened, I believe, a lot of doors for me that otherwise may have stayed shut. The accounting degree provided more of a firm foundation of accounting principles and financial analysis, which is critical in real estate investment. And then add to that my CPA and audit experience, which provided exposure to forensics, financial examination, communication with top-level executives, so you learn communication skills, and then business law, such as contract review, governing docs, you're reading operating agreements, and you're having to interpret those. So this experience really was impactful. And then layer that with a large, recognizable global company with intensive training really did propel me. That foundation I was just able to build upon when I moved through my real estate career and was involved in various components of the real estate transaction. I was a strong operator with the ability to really analyze the deals, the financials, the underwriting, the forecast, interpreting the governing docs, and then performing the due diligence.
Always advantages to having that accounting background.
Absolutely.
Since we have a number of Andersen MBAs watching, and many will pursue careers in real estate management, are there any pointers you can share with those who hopefully eventually want to lead their own firm?
I think leading any type of firm, because I've led a few, I've been blessed to do that, requires a blend of knowledge, interpersonal and technical skills. Certainly requires an entrepreneurial mindset. And then what I believe is very important is building the right resources, meaning the people around you. I touched upon this a little bit a few moments ago as it related to my own personal experience. I created a balance in my career of my capabilities to lead a firm. But specifically for the real estate industry, the technical skills would be the real estate knowledge that comes from formal education and hands-on experience. I would expose yourself to each aspect of real estate, which is the property management, the asset management, construction management, and investment management, as this allows for greater knowledge in the effective execution of the entire real estate investment plan, as each area does significantly impact the success of the plan. I'm speaking from personal experience and having exposure to all of that. Additionally, the financial, legal, and regulatory knowledge is critical. It's when you're performing the analysis, when you're handling the deal, performing the debt, looking at debt structures. This is where, through my audit background that I mentioned earlier, really allowed me to be successful in this industry with the legal experience and being able to read documents and negotiate. On the more interpersonal side, the leadership skills and the networking, relationship building, it's critical in both running your own firm as well as finding and making deals happen. The leadership piece is to successfully run your firm, while the networking is critical to build your business. And as I mentioned a moment ago, I think the last item, but it's the most important based on my experience, is that entrepreneurs on the real estate investment side of the business need a diverse team of people around them to execute the investment business plan and run the firm. So it's really knowing your strengths and weaknesses and building a strong, well-rounded team of people that complement your skills and vision to have the long-term success.
Extremely valuable advice. As we look ahead at the future of real estate in general across California over the next decade, what do you believe some of the key trends that we'll see?
I think the market's going to be shaped by a blend of sustainability, technology. There's a demographic shift coming in process, and of course, continued housing affordability issues, and then always new regulations. There's also going to be ongoing challenges with the climate change and affordability, which is going to drive innovation. And some of that innovation is going to come from technology and come from, building infrastructure. So I think a few of the trends that are going to emerge or continue to remain significant and become larger, you're going to have more real estate developments that are going to be pushed towards a resilient infrastructure due to the climate change and sustainability. The climate change most recently, the wildfires, we have droughts, mudslides, rising sea levels, and then sustainability has been around, but It's going to increase as it relates to increases solar, energy efficient designs, and continued green building standards. The reason for that, some of it is obvious, but the sustainability and the ESG are factors that are extremely important with institutional investors. So they're demanding more socially responsible developments and proof of those ESG initiatives. I think another trend is going to be the continued ADUs as a solution to the housing shortage and the affordable crisis. And I mentioned earlier innovation. That's going to come through continued focus on prop tech, property technology, and then just AI-driven analytics that will continue to expand, not only from the buying, selling, tenant screening, but also managing properties and, of course, running analysis on potential investments. We're going to see an increase in AI and prop tech with that. Remote work will continue to be significant, and we've already experienced that where it's pushing more residents, more people to affordable suburban or rural areas versus staying in a densely populated urban center. And with that, mentioning what we do earlier, like adaptive reuse, which is what Areas does as part of their business plan, that's where adaptive reuse is going to continue to be significant because you're going to have a lot of vacant spaces in these urban centers. And we have a housing crisis. So it's taking those vacant spaces and really turning them into mixed use. So you have both housing and retail. And then lastly, I would just say there's going to be an influx of international institutional investors. California is attractive. And there's also going to be, I think, more national investors that are going to be coming into California for both retail and the commercial real estate market.
Very helpful to gain your perspective about what lies ahead. And that brings us to the end of today's episode. Julie, thanks so much for taking out the time to be with us.
Absolutely my pleasure. Thank you for having me, Seth.
Of course. And thanks to our viewers for tuning in. We'll see you on the next episode of the Forecast in 5.